So risk management, it is such a big part of a finance leader's role, and it's unfortunately you can't ignore it. So even if you're working for a startup or scale up, risk management still is part of your role. It's your responsibility, and it is something you need to consider on a regular basis. Hi, my name's Alysha Randall. I am a fractional CFO, and I also train new and aspiring finance directors and CFOs in startups and scale ups. And today I really wanted to talk about risk management. So I want to have a look at the different types of risk management that risks rather that is very specific to a startup or scale up. And at a high level, what does a risk management framework look like that you can implement and then review with the founder and the leadership team? So the first risk I wanted to talk about was the one that's the most obvious and probably the one that you're already looking at quite regularly, and that is liquidity risk. In the UK, about 20% of new businesses go out of business after 1 year, and a huge amount, 60% in the first 3 years. And there are, a few key reasons for that, but one of them is cash, running out of cash. So liquidity risk is something that a finance leader should be on top of and reviewing probably every single week. And it's something that should be discussed with the founder and the leadership team on a regular basis. So looking at road to break even, looking at when you're going to start running out of cash and may need to think about fundraising, equity or debt, looking at ways that revenue can be increased and expenses can be decreased, and then also looking at working capital. How can you get your revenue into your bank account faster, and how can you delay the payment of expenses? The next one is debt risk. This may or may not affect your business. A lot of startups that I work with, for example, don't have any debt because they rely on equity fundraising. But if you do have debt, not only, of course, the risk of paying it back, which ultimately is liquidity as well, but usually with a debt, covenants or warrants are also part of the agreement. So as a finance leader, you need to ensure that all of those covenants are met, and there may also be reporting requirements. There is an element of interest rate risk as well if you don't have a fixed interest rate, and so that also needs to be considered. The next one is compliance risk. So not only is it, regulatory, so if you're a fintech, you need to quite closely look at your regulatory requirements and ensure that you're compliant, but also just being a company. So most of these absolutely fall on the finance leader's responsibilities and roles. So you are probably very familiar with them, but they are things like financial statement reporting, tax reporting. In the UK, there's also company house need to be updated regularly. So there are some company secretarial duties that will fall to the finance leader in a startup or scale up. So making sure that you hit all of those deadlines in all of the regions that you are owning, is part of your group. So if, say, for example, your parent entity is in the UK and you have a subsidiary in, say, Spain, Germany, and the US, you need to be fully versed with all of the requirements in each of those jurisdictions and ensuring that you and your team hit those deadlines. The next one is more around working with the business, and that is your process and operational risk. So all processes within the business may have some element of risk. And so as a finance leader, it is worth understanding what those process risks are and, helping the leaders around the business mitigate against those risks. Then there's personnel risks. So if you have employees, that business has employees, which generally do, it's understanding all the risks around that, particularly if you're going through some extreme process such as a redundancy, and in 2023 and still in 24, redundancies are relatively commonplace. So if there's any task like this, obviously the finance leader is heavily involved. There are lots of risks to consider when going through a redundancy process. And so ensuring that the business remains compliant to all of these requirements. Then we have supply chain and key supplier risks. So again, this is working with the business, and that is understanding, to start with, who are your key suppliers? Who are you heavily reliant on in order to run the business or provide your customers with the services that they require? Ideally, it's good to have those conversations with your business partners around the business. So not only are these risks identified, but also understanding how you can mitigate against those risks, particularly with key suppliers. If you are so heavily reliant on one key supplier, is there a way of looking for alternatives and having conversations with those alternatives so that you have multiple suppliers that you can draw from? Security and cyber risk, I mean, this one is quite well known. The CFO generally will need to ensure that there is insurance in place for a cyber attack. And there are many, not only just hacking, but also GDPR in Europe risks, and making sure all of those are mitigated against. Of course, working with sales, marketing, and the CTO to ensure that everything is as tight as possible and everything can be done to stop any cyber attacks or GDPR breaches is much better course of action than having a cyber attack and then relying on insurance. Insurance is absolutely a plan B. The plan A should be to block all of those gaps and protect the business. And then finally, external and macro risks. So of course, these are out of business control. We have had two major ones, well, particularly in the UK, very recently, the COVID, of course, the pandemic, and then in the UK, Brexit was also a huge risk for a lot of businesses, and, it hasn't been great post-Brexit. So the best course of action, preparing for a macro event is a business continuity plan. I'd say that word today. And so basically it's once a year having a review with all of the leaders in the business. If the business had to shut down for 5 days, for example, what would we do? What would we need to arm the business with in order to continue operations? A lot of businesses have already now got these in place because COVID happened. And so businesses really had to prepare for everyone working from home. Obviously, not all businesses are able to do that, but it's making sure that you have a plan that if something happened again, what would you do? You have who is the person that calls everyone? Who is the person what's the email chain? Do you have certain codes that you need to keep in a place off the premises? Is the backup, tech backup, also, in another town? All these different things need to be considered and also looked at from an annual basis with all of the leaders. So then the next step, once you've identified all the risks, is into implementing a risk management framework. So risk identification is the first course of action. So really identifying the risks across the business and working out who can kind of owns this risk and looks for mitigation. Risk assessment is next. So it's thinking about, with all of these risks, what is the likelihood of these happening? I mean, you're not always right. The risk of a pandemic 10 years ago is probably quite small, but now people may put it slightly higher. So looking at what is the likelihood of this happening, and also what is the severity of this? So if said risk happens, does it mean the company has to shut down, for example, or is it something where people have to work long hours for a week to fix? The next one is risk mitigation, and this is probably the area that needs quite a bit of focus, because again, it's better to plug the gaps than it is to fix once this risk has happened. So really developing strategies through controls, insurance, which is a plan B, and operational adjustments. So the risk that you currently have is reduced of it happening. Monitoring and reporting. This is probably the hardest part for a startup or scale-up, generally because you don't have a risk team. If you're in fintech, you probably do, so the risk team can kind of take ownership of this, but you may have to try and include it as part of an annual process so that the people are more involved in it. The board may be more interested in your risk management framework and understanding what the risks are of the business. So whether you make that a recurring conversation with the board, say biannually or even quarterly if the risks are high, so that the leadership team is also more inclined to review this and update where necessary. Otherwise, setting the budget is also another good way of adding in that risk management framework review during budgeting time. And then obviously continuous improvement. So not only when looking at the risk framework, you're just thinking about, oh, this risk is now higher or lower. It's actually trying to implement those gap fillers, so to speak, to mitigate against those risks a bit better. Anyway, I hope that helps you with risk management. If you don't have a process in place in particular, it should give you some food for thought, and certainly something that should be discussed with founders. Having a risk management framework is also quite important when you're doing some equity fundraising, because when you have your data room, if you kind of have your risks framework or a summarized risk framework within your data room, it's only going to help with the investors believing that you are a professional outfit, so to speak, and you have thought about all of the risks. It's not just, oh, look at us, we're sales and marketing, our product is amazing, but it's also, these are the risks of the business. So having that visibility and showing that some thought has been put into it, particularly around mitigation and business continuing plans. So hopefully you find that useful. We do have a leadership guide. If you're interested, you can download that for free. We also have finance tech stack recommendations that you can also take a look at. I'll leave the links for both of those below. Otherwise, don't forget to subscribe, and I'll speak to you next week. Cheers.